Hi, everyone. Welcome back to Atrium Research's YouTube channel. Today, I have the pleasure of interviewing Paul Parisotto, the president and CEO, and Ian McDonald, the chairman of Moon River Moly. Moon River Moly trades on the TSXV under the symbol MOO or MOO. And just as a quick little overview, Moon River, it's a development company focused on two molybdenum projects in British Columbia. The first being the Davidson project, which is Moon River's flagship asset. It currently, they recently announced a PEA on the project with an after-tax NPV at an 8% discount rate of $602 million. And then their secondary asset, which is the recently acquired 25% interest in the Inu molybdenum mine, with Centerra Gold owning the remaining. We have a buy rating and a target price of $2.20 on the company. Paul, Ian, thanks for having me here today.
Thanks, Ben.
Thanks for having us, Ben.
Okay, and so to dive into things, for those listeners that are unfamiliar with the story, Paul, Ian, maybe it's a good time for you to kick it off with this presentation, give the viewers a high-level overview of the story, and then we'll get into some questions after that.
Okay, thanks, Ben. We really want to focus on our two main assets, and I can answer a few questions on molybdenum. Suffice to say that molybdenum is a necessary metal in today's economy and going forward, and it is not substitutable. And the world hasn't built a new primary molybdenum mine since 1983. But on this slide here, I just want to show where our two large, world-class, scalable assets are. They're 200 kilometers apart. The Davidson project is what we believe is the highest grade of all the large molybdenum deposits that are not in production. And although it has been slated for production with three previous feasibilities done on it, what we're doing is we're proving that it'll have a recovery of tungsten as well as copper and maybe even subsidiary metals like gallium and rare earths. But even without those, the grade of the molybdenum makes this really stand out. I'll talk a little bit more about that in a second. The Inu Dao Mine, which was Canada's largest producer of molybdenum. It was built in 1965. It was in production for 50 years, and it's been on care and maintenance for the last 10 years. And our objective is to get that mine turned back on. It's got a beautiful brand new mill. It's about the fifth largest mill and complex in Canada, and it's brand new. It only operated for 2 years. The replacement cost would be somewhere over $1 billion on that Inu Dao mill. You can see some of the other molybdenum producers in North America. The Kitsault mine over to the west, it hasn't really produced since the 70s. But the Thompson Creek mine, which we have quite a bit of familiarity with because a lot of us in our former lives used to operate that. Centerra Gold owns that, and they announced last Thursday that they're going to turn that back on with a $400 million investment. So it does seem like molybdenum, there is a realization in the marketplace that we need molybdenum. And the other, besides the two assets, if we go to the next slide, you'll see the people involved. We don't have a large team, but we have a experienced, knowledgeable team. Paul and I have known each other for 40 years. He's been in the resource business. He's been CEO of several companies, of three that were sold in the last 25 years. And I was, as you see from the slide, the founder of Inu River and Blue Pearl. But also, Lorna McGilvery was the counsel at Thompson Creek. Gord Reed was the COO of Centerra when they operated these assets. And Mark Wilson is our special advisor. He was president of Thompson Creek, and he knows more about molybdenum than anyone I've ever met, actually. And the other people on the slide, Tong Yin, Alice Murphy, and Jamie Levy, are all very seasoned mining executives. But that next slide, the demand is very important because, I mean, all charts that essentially go from the bottom left to the top right look good, but this is the demand worldwide for molybdenum. And for the last 80 years, it has been £2.2 billion pounds, rather, not million. And we just don't know where that's going to come from because, like I say, we haven't built a new mine since 1983. There is one large mine, primary molybdenum mine, getting built in China, which will be operating by 2027. Now, there's the what molybdenum is used for. You can just put it simply. It makes steel stronger, harder, and less corrosive. They call molybdenum a noble alloy, and that's because it does alloy so well, meaning the characteristics that it has, like the ability to withstand heat. It can be transposed very easily in small quantities, like most applications are only for 0.5%. I want to skip through the other molybdenum applications. Suffice to say that there is a lot of them, but the production is switched in the last 40, 50 years from North America to China. They now are the biggest producer, the biggest consumer. And there's no question that what happens in China will affect the go forward demand and price of molybdenum. But we think it looks very good because they've had to close several molybdenum primary mines and byproduct mines just because they're cleaning up and making the mines more 21st century acceptable. Mm-hmm. And there you can see the results of the PEA, which we're going to update. It probably won't be done to the end of the year or first quarter next year. And the objective is to capture certainly the tungsten and the copper and maybe those other minerals, recover those and get the overall cost per pound of molybdenum down. What we're proposing, what we have said in the PEA, it's about $8 per pound US, 1084 Canadian. But if we can get the other values for tungsten, we are highly confident that we're going to get the cost per pound down to less than $5. And that would put it in we believe it'll be the lowest cost producer at that level on all primary mines. Mm-hmm. I don't know whether you want to add anything, Paul, on the PEA at this point.
Yes, Ian. I'd like to, if you don't mind. You've been doing a great job informing everyone about Moon River. As Ben indicated, the after-tax NPV of the Davidson deposit is $602 million, assuming an 8% discount rate and a long-term molybdenum price of US $21.50 a pound. And this deposit, which is located in Smithers, British Columbia, it's literally a 10-minute drive from downtown Smithers, which is a community of 5,000 people and has all the infrastructure. But this deposit has the makings of everything you would look for in building a mine in the 21st century. The metals, moly, and the potential byproducts that Ian has mentioned, tungsten, gallium, copper, and rare earths, are all critical minerals that we need to decarbonize the globe. So they're really, really important. So we need them. So that's a check mark. The mine life will be 20 years, producing, processing about 2.5 million tons a year, and that could be expanded beyond that. So you have all the critical minerals, you have a long mine life, you have one of the highest grade deposits in the world. As a matter of fact, the British Columbia government on its website says it is the highest grade primary moly deposit in the world, but so it's one of the highest grades, so that helps. We have strong dynamics for the molybdenum market going forward, and the other byproduct credits. So that's That's really important. The CapEx isn't overwhelming. It's in today's world, it's $575 million Canadian, which includes about 110 million dollars of contingencies. Our average cash costs are, say, $8 US per pound of molybdenum produced with no byproduct credits. And we're doing some work on that, which I'll expand on in a minute to hopefully reduce those. And as importantly, there's a low carbon footprint that's going to be involved with this deposit. And as everyone knows, it's great to have all of these high grades and lots of tonnage and great NPV and good location, but you also need the support of the local communities to have that social license to be able to go forward. And so our vision in developing this mine is to have 2 tunnels that go in from the backside of the mountain, not facing the town of Smithers, to locate all of our processing facilities underground. And so most of the tailings that are produced from that processing facility will then be used to backfill the stopes that, or the areas that we mine. Any leftover tailings that aren't used will be dried and stacked, and put outside the backside of the mountain. What that means is that there'll be no tailings pond. And that's always a concern to people. And so there'll be no tailings ponds, everything's underground, no visual pollution, no noise pollution, and very little, if any, carbon dioxide emissions. So all electric. So that's, a really, really excellent selling point as well for the development of this mine. And lastly, I want to add, there's lots of data that we have to update, of course. But data from decades gone by, we know that there doesn't appear to be any acid rock drainage, which is also another really important factor in minimizing any potential damages to the environment.
Yeah.
Ian, you want to heard your voice there? You want to say something?
No, I think that was Ben, but that's
Oh.
right. If you go forward a couple of slides, you can get a look at what the ore body looks like. It is a very, very large ore body. It's about 900 million tons that's identified so far, which we're proposing to take out the highest grade, the highest 50 million tons. But in 25 years, if the price of molybdenum is still up or even higher, there's no reason why it couldn't be extended another 10, 20, 30 years. It's a massive deposit. It's actually about 2.5 kilometers wide by 2 kilometers high. So it's big.
And I'd like to add to that, just if we're successful and we're cautiously optimistic that we can recover some of these byproducts, that it will push our all-in sustaining costs even lower. And we think it could put us towards the bottom end of worldwide primary moly producers. And that's always a good thing. You want to be in that bottom quartile or bottom 10% in terms of all-in sustaining costs. And we have the possibility here to do that. So we're cautiously optimistic regarding that. So in order to establish and figure out what that actually means, we recently completed a 2-hole diamond drill program to recover about 1.5 to 2 tons of fresh drill core. And that drill core has been sent to a lab in British Columbia, where they have now begun the work to determine if we can economically recover these other byproducts. As a reminder, tungsten, gallium, copper, and rare earths. And we should have the results of that work at the end of this year, the beginning of next year. And once we know the results, we'll of course disseminate those to the public, and then we'll begin the process of updating our PEA, which would mean updating the resource estimate for these other byproduct credits or other metals, and update the PEA, which should take us into probably Q1 of some time of next year. We have all of the drill core is safely secured in a great location in Smithers. It's just a matter of getting it out and re-assay. So that shouldn't take too long. So we're not really spending any money on doing drilling to upgrade the upgrade or expand the deposit. All of that work was previously done. So we are quite fortunate.
Yeah, we are not a company that is exploring or trying to find something. We are just, well, as I say, this has already had 3 feasibilities done on this project, so we're just trying to optimize it, especially with these other minerals.
Correct. And now I'd like to move on to our other asset, which, as Ian said, is 160, 200 kilometers away from Smithers, and that's the very large Daco mine. It's an open pit mine that's been in production from 1965 to 2015, and we own 25%, and Centerra owns the other 75%. Now I want to emphasize, when we announced the acquisition of this acquisition closed towards the end of May, and we acquired it from a company called Sojitz, which is a large Japanese publicly traded trading company, and they actually paid us $43 million to take over their interest in this deposit. They had interest in other mining deposits around the world, which they have been selling, and they're getting out of the mining game. And so, of that $43 million, $2 million came right onto our balance sheet for the company to do as it deems necessary. The other $41 million has gone into an escrow account. And that escrow account has 2 primary objectives that it has to satisfy. One is to keep money there for reclamation costs down the road. So just paid us for the existing reclamation costs in bonding that is required, and future bonding requirements that we expect we'll have to provide for. And then secondarily, the remaining capital is used for ongoing care and maintenance, which gives us a 4 or 5 year window to do work and, more importantly, hopefully get the Daco deposit back into production. All of the interest income that is generated from those funds in escrow come to the account of Moon River and can be used for general corporate purposes. We estimate that, going forward, that amount of capital will generate around $1 million, $1.2 million a year, which will, of course, help defer any, ongoing costs that we have. It's a fabulously well-maintained, looked after complex. Ian mentioned the mill is brand spanking new, 55,000 ton a day mill, which is really, really great. It has power, it has a workforce, it has a community that is open and wants to see this facility be put back into production. And so the vision of the company here is, while we're developing our crown jewel, the Davidson deposit, which will take a number of years to advance it and build the mine, go through the environmental assessment, etc., that we hopefully can have the Daco deposit can be reinstated and begin production, and it would generate cash flow for us, for the company, while we are developing and bringing the Davidson deposit into production. So that's our goal with the Daco deposit, and we're pleased to be partners with Centerra on that. There's a mine life there that exceeds, that probably 10 or 15 year of mine life without doing any additional exploration work. So now it's really trying to figure out what's the best way to put it back into production, and what it would cost, and what the returns would look like.
Yeah, I'll just add, if I could,
yeah.
that I was the chairman CEO of Blue Pearl when we purchased that. Back in 2006, we owned the 75%, and but that mine in 2006, 7, and 8, when I was CEO, it cash flowed about 200 million Canadian a year. So it was a very profitable operation. We had slightly higher molybdenum prices back then, but we have pretty good molybdenum prices now, and we have had for the last 3 years. So I'm very optimistic that will get turned on in the next short period of time.
I want to touch upon our cap structure, because we've worked very hard to ensure that we have a good capitalization structure. We have just under 33 million shares outstanding. Management and the board owns about 21%, and Generation Mining, the public company that we acquired the Davidson deposit from, owns 9 million shares, or about 28% of the company. We went public with the Davidson deposit. It was a public company, but the qualifying transaction occurred in October of last year. We issued 12 million shares at 25 cents. And so, all told, fully diluted, there's 36.6 million shares outstanding, or fully diluted, and 33 million partially diluted. And we have a little over $3 million of cash on our balance sheet today, which will see us through our metallurgical test work and updating the PEA, and some money left over. And so we think that's very, very an attractive capitalization structure for investors to look at.
Yeah, well, and one thing I'll just touch on there that's great is, like you said, the Endako mine and the interest income covering the majority of your G&A for the company makes it so that you don't need to dilute yourselves into an oblivion, and shareholders included. So that's a huge benefit that makes you guys stand out from your peer group. And so just to summarize, because you did already answer the majority of the questions I had written down, so kudos to the both of you. But I thought it would be great, Paul, maybe if you could summarize the next 6, 8, 9 months in terms of catalysts coming down the pipeline, mainly to do with Davidson and what's going on there, but maybe paint that picture for the viewers here in terms of what that looks like from a catalyst standpoint.
Thanks, Ben. And that's a really important question, and I'm glad I get a chance to address it. So over the next few months, we've already started the metallurgical recovery test work with a prominent laboratory in British Columbia, and that's going to take a few months to complete. And once we have the results of that, be towards the end of this year, we will press release the results. The market will have an understanding of, and you can maybe do their own calculations of what that could mean to increasing the value of the Davidson deposit and the free cash flow that it could generate. I always think about things in terms of how much cash can we generate from operations, or per ton or per pound of moly that's produced. Once we have that information, we're very quickly going to move into publishing an updated preliminary economic assessment. So then the market can really understand what the economics are of being able to produce and get credits for these other metals. So those are the main things that we're looking at and working on that'll be catalysts for the company. Having said that, there's a really sort of interesting, perhaps really important item that we're going to be doing in the meantime as well that could find some hidden gems for us. And what I'm talking about is we've had a chance now since we did this small drill program in August. There are just boxes and boxes and boxes and boxes of work done by the previous owners, primarily Climax and AMAX, very, very large, well-regarded mining company of years gone by. And there's a lot of great information that's in these documents of work that was done in prior decades. So we're going through and we're going to be digitizing all of that information and assessing it and hopefully using it to our advantage. And as an example, we have all the certificates from all of the prior assaying of all the prior drilling that was done at the deposit. And so we don't have to go back and do that. So we're going to put that we're going to digitize that. It's going to save us hundreds of thousands of dollars and maybe millions of dollars, and more importantly, a lot of time, because we have that. So while this work's going to be done, we're going to be working in the background, going through that information, and hopefully finding some hidden gems that will add a lot of value for the company. And those are the main things that are going to be happening at Davidson. And over at Indaco, we're doing some internal work here to figure out, what it could cost and what it could look like for us to turn that on. And once we have information in a form that we can disseminate to the public, we will do that. But we're obviously didn't acquire this interest in Indaco to sit around and do nothing. We want to try to create value and figure out what the economics would look like if we restarted this operation. So those are the key things that will be happening, and we'll be out communicating with the investing public and other stakeholders. And we're a fairly new company. We're just getting our name and out there with people. The story's been well received, and we expect that will continue into the future.
No, that was great, Paul, and I appreciate the breakdown and summarizing those catalysts for the next 6-12 months here. And it certainly sounds like an exciting time ahead. Ian, before I wrap up with closing remarks, anything else on your end?
Well, I'll say this, that what we're not going to do is acquire a lot of other known molybdenum deposits, because there's no shortage of them. But even just this week, I had inquiries from 2 groups saying whether would be interested in their project. We're not. We're going to stay focused, because our assets are large, scalable, and certainly Indaco could be in production relatively quickly. And I would say this: if the Davidson deposit was almost anywhere else on Earth, certainly in China or Russia, it would already be in production or mined out. So I know we're on the right course here.
Yeah, no, that's great. It makes a lot of sense having a strong focus on one, maybe 2 assets, and stick to that. So with that, gentlemen, thank you for the time today. We're looking forward to seeing all of those releases, like you said, through the fall and into next year. For our followers, if you haven't seen our research on Moon River, you can find it at atriumresearch.ca and our deep dive into the company by way of our initiation report. And again, gentlemen, thanks for your time today.
Thanks, Ben.
Thanks, Ben. Bye now.
Take care. Bye-bye.